Bhaskar Bhatt, the MD at Titan, joins us in the phone line right now. Mr. Bhatt, it's been a quarter of surprises for you. Margins, profits, both have zoomed, but you've been unable to, meet your own first quarter jewelry revenue target of 15%, which was set by you after already considering the weak consumer sentiment, etc. What were the unanticipated challenges that you faced that caused your jewelry sales to dwindle to single digits?
Well, I think these anticipated one was the extraordinary quarter that we had last year, sale in the first quarter last year towards the end of June because of the imminent GST introduction. Almost 250 crores was advanced. And on top of that, we had set ourselves some pretty aggressive goals. Nevertheless, the wedding season, wedding dates, etc. were fewer and it was a weaker quarter. Plus, the industry decline was quite significant. In terms of all the turmoil that the industry has gone through, you are aware of the problems the industry faced. So, however, we were focused on achieving our profit numbers. Therefore, you would see a lower growth in top line in jewelry than expected, but the bottom line has grown quite healthily.
Okay, so consumer appetite has also decreased, as you mentioned. Industry sales growth as well have actually declined.
So the price of gold was also high in a phase during this period. No wedding dates. Adhik Maas was on a... But anyway, those are all typical reasons. The sentiment was weak for jewelry.
Were you still confident of a double-digit growth for the balance of the year?
Certainly, certainly. In fact, July itself has turned out to be extremely good. And we have, month of July has been extraordinary. But that was also expected to some extent because, last year was the advancement of sale into June and therefore the July base was low. So the making up will happen. All of it will not be made up. But the rest of the year, we will be on target. We are quite confident.
How come such strong sales in the month of July and why such volatility in the sales growth between months? I mean, is it just a base effect or is there something more to it?
One is the base effect, but more than that, as I said, there is this phenomenon of the delayed wedding period. July had some strong wedding dates. So wedding purchases during June, that April, May, June quarter was low, no dates and so on. And July has started with very good very good wedding season. So, and we also activated plus base effect. So, it's not volatility so much. Some of it is certainly consumer demand oriented, demand driven. Some of it is base effect. And price has corrected as well, gold prices.
Point. I want to talk about now the studded jewelry sales because we understand that's grown only about 10%, but still there has been a significant margin expansion. What explains this?
That is primarily because the mix effect. Studded jewelry has grown much better than plain gold jewelry because of the price of gold and wedding. As I said, wedding purchases are predominantly plain gold.
You say that you're confident of double-digit growth for the balance of the year for the jewelry segment. Yes. Is it going to be within the 10 to 15% band or could it be higher than 15% as well?
No, it will be higher than that.
Okay, great to hear that. But less than 20, right?
No, our target is more than 20.
Okay.
So, we are not changing our target.
Okay.
Mr. Bhatt, could you broadly tell me how much of your sales currently is coming from your existing stores and how much is coming from new stores?
Existing stores is over 90%. If you want to call, we call new stores as those which opened less than a year back. So, today, in our total 300 plus stores, the number of stores we add is in a year between 30 and 50. So they will contribute to less than 10%.
What I'm trying to express, understand here is that you don't need a large capex in order to grow. If 90% of your sales are coming from existing stores, that
No,
clearly means that you can grow
Not
without
franchise.
expanding.
We don't have too many additional company stores. The capex is only for company stores. A significant proportion of our sales comes from franchise stores.
Okay. What is the update on the non-jewelry business, the watch business, where there is a real competition from smartphones, where there is a real competition from...
We've done extremely well in watches, as you can see. The bottom line growth is higher than the top line growth. Titan brand has really outdone every other brand. We've improved market share, and of course the extraordinary margin improvement to 18.8% is only because of the product mix change towards Titan, but that's not a sustainable margin. However, the margin improvement is quite significant. So we have improved market share. Growth is back in the watch business. And yes, competitive intensity has grown, but we have had, we've changed, we've recrafted that business significantly, as we've been telling you in the past. Cost compression, mix improvement, premiumization, channel mix. Our e-commerce business has also grown, become one of our fastest growing and most profitable channels.
All right, Mr. Bhatt, appreciate your time and thank you for joining us.